Good morning, traders. Welcome to the pre-market game plan for today. It is January 30th, 8:20 a.m. Eastern Time. We have 2 more trading days this week before we switch to a brand new month, the month of February. Brand new monthly candles, brand new weekly candles as well. And the price is going to paint a much clearer image than what we currently have right now. Are we going to get a much steeper pullback, or are we going to rotate from these support zones and navigate back into the highs? Yesterday, FOMC meeting was a very turbulent day. We saw a few of the indices trigger to the upside. We had the Dow, NASDAQ, and Russell that actually were at the trigger point and triggered. The S&P did not trigger, and I sent out a video last night with how I navigated in the trading room with our members, the long trade in the Dow and in NASDAQ. For today, usually after FOMC meeting, we need a calibration day. It's just like option expiration. We need a little bit more time for the price to digest the area. We had some earnings last night, and that is also going to be in the mix. Right here, some good, some not so great, and some fantastic. So we have a balance. The market is still sitting on plenty of support from major time frames, and I'm going to mention those levels in a second. Also this is going to be, like I said, a calibration day. So be very patient in waiting for the trigger and waiting for the trade to line up for you, and make sure you have the plan. For those of you that are in the trading room, I do that for you. But make sure today you apply a lot of patience. Also, gold has reached the targets from the alerts letter. Gold was seen as a hedge trade in case one of the indices is going to fail. Now, remember, when you're trading futures, do not leg in to all the indices at once. I typically have have a favorite, whether it's NASDAQ or whether it's the Dow, and I mention it in the pre-market game plan. So trade only one index and have an idea and be ready to hedge it with either bonds, if you trade bonds, or gold. At this moment, oil is coming in quite heavily from the overnight trading activity, sitting on support right here into the $52. Whenever oil is feeling a little bit heavy, the market feels heavy as well, right? Because definitely with the lower oil prices, oil stocks are under pressure, and they are a big component of the S&P, and they drag the S&P down with it. Let's begin with the Dow, the analysis, and pretty much we're holding on support. We are trading right now on the 50 simple moving average on the daily chart, and on the 10 exponential moving average on the weekly chart. What does this mean for our charts? It means that we have higher time frame support, and it is noted right here on the chart. We have the 50 SMA daily. We also have minor support from prior price action from the cluster that we had at the end of the year and into the first few days of January. So we have a really strong area of support right here at these lows into the 28,400, and actually between 400 and 600. That's why things are going to be very choppy within this area. So the price is either going to start rotating, and we have some signals here. This is going to be a 4-hour rotation, which means that above we can see the price moderately bullish into the first area of resistance, which can represent a target into the 684, and then we have a little bit of a void above into the 734 and 750. So that is going to be a cluster. Now remember that these resistance bands are not exact prices, and they often like to pinch through resistance. So be very careful when you're trading, especially on your own. Make sure that you pay attention to those areas. So if you are taking a trigger, let's say on this 4-hour over 600, now remember, stops are going to be a little bit wider. Remember, you can also position size using micros, right? So you could take a plethora of micros, or you could trade the full contract depending on your account size, and of course depending on the stop. Wider stop, if you have a small account size, you could go ahead and you can use micros to position size for your risk per day, because the risk per day is the most important thing. What does that mean, risk per day? Oftentimes I hear traders saying, hey, you know what, I have $5,000 account and I'm trading one contract, or I have $10,000 account, I'm trading with two contracts. That is the worst thing that you can do for your account. You have to know how to position size. We teach this in our classes. We teach this often in our free webinars. So depending on the risk level, let's say the entry is here 600 and the stop is 400. If you only can risk, let's say $200 or $100, obviously, because your account cannot sustain, that is your 1% per trade, let's say, or your 2% per trade, or your 0.5% per trade. If you're a beginner trader, you're not going to be taking that trade with a full contract. You are going to try to adapt and take the trade with 1 micro or 5 micros or whatever the risk is for that point. Please refer to the chart that is attached to the newsletter and tells you how much a micro is and how much a full contract is. And then you can position size. You have the amounts on the left hand side. Go to the amount, go to the specific amount, go to the specific risk level. If you're trading with 100 points or 50 points, just make sure that you respect the support resistance. These support resistance represent trigger points. These are areas where algos react, etc., etc. All right, so basically YM is seen bullish over 600, moderately bullish. This is going to come from a rotation. No trades in between. If it breaks 400, then it may continue to slide lower, and we have lower targets 340, 250, 200, 84, etc. And for the upside, you have the notations here, and they will be present in the letter as well. So like I said, the first target that we're going to be looking for is actually this minor resistance that is coming into the 670 zone. So make sure you start trailing a little bit out here, and make sure that you take partial profits at least, especially for those of you that have larger trading accounts and are trading with a full contract and have multiple lots or multiple contracts, or even if those of you that are trading with micros, remember to scale out. And typically what I do, depending on the zone, because it all depends on price action is king, make sure that once you hit your target one, you're quickly lifting your stop to a break-even zone, so you don't risk anything on the trade, right? So you don't want to see the price coming back down, and you don't want to see basically, you know, your accumulated gains go away. So always target one is the easiest target to achieve. I mentioned this over and over again in the trading room, and I'm going to mention it to you guys here. Target one is the easiest target to achieve. You have algo participation, you have institutional money participation, especially at the beginning of the trading session in the first 30 minutes to an hour. So you're more likely to hit target one. After target one is hit, a lot of traders are taking profit, and that is when the pullback is happening. And that's also in sync with the timing in the market, whether it is 10 o'clock or 10:30 or 11:15, etc. All right, let's move on to the mini S&P. Not much to comment on it. Like I said, the market needs to digest these current areas. We have a very wide void, support 32.33, and we have resistance at 32.60. We have another resistance zone at 62, and then we have another resistance zone at 70. So what this means is that these resistance areas are going to represent nothing else but target zones, and you could see them right here also. So now we're trading into a chop zone, which is relatively wide, and remember, we have been into this chop zone before, and that is in yesterday's trading session, where we had support and resistance for yesterday's trading session. So again, over this 32.90, it was very bullish. 92 actually was very bullish. It never triggered above, but it broke below here. So now we have a wider range, and actually we do have a weaker structure. Why? Because we found resistance into that one big ranging week, which was right here. So now the price needs to digest what? Well, first off, it's going to execute the 4-hour rotation. You can see the notations right here. So this is nothing else but a 4-hour trigger buy. So 32.60, moderately bullish above this area. So longs only over this area. Like I said, the risk level are going to be a little bit expanded because of the nature of price, not because I want to have a wide stop, no, but because the price is dictating where you need to put the stop so you don't get dinged out of trade and stopped out of the trade. So all in all, if we trade over 60, we become moderately bullish with a chance for a progression higher into 63, into 70, etc., etc. You see the notations right here. All right, so and they're also going to be typed into the newsletter. Below 32.30, this would mean that we're starting to accelerate lower, and the target is going to be 32.20, I'm sorry, 32.20 right here. In fact, 22 to 25, 32.20, and then we're going to navigate towards 06 and even the 81. So because of the structure, we gapped down, we rotated, we filled the gap. Now we found resistance at this. We should have held here and we should have broke out, but the Fed said that it will keep the rates unchanged. So nothing really changed in the structure in the market. So now it's purely fundamental based. All right, so under 33, this is going to be bearish with the targets that you see below. All right, let's move into NASDAQ. And in terms of relative strength and relative weakness, we have an advanced decline in Russell and S&P. And remember, Russell always is seen as the wild card, pretty much kind of like I would say the market gauge, if you will. It was the first indicator it was the first, let's say, quote unquote indicator back in 2018 when that volatility hit the market. All right, so NASDAQ, a little bit more bullish than the rest of the indices because price into the indices is pretty much hovering into the lows of these ranges. However, NASDAQ is still holding strong. I don't know if you guys have seen the earnings in Tesla, TSLA. You always have to keep a tap on stocks because remember, stocks is the one element that is fueling the stock market, the futures market, right? These indices are reacting based on their components. So Tesla had a huge move to the upside, almost 660 here, and now pulling back. So this is huge for NASDAQ, and this is the reason why NASDAQ continues to have relative strength. But remember, in a weak market, even the strongest elements begin to pull back. It's just that they're pulling back the last. So they're the last to execute the pullback. So we have a low and we have a higher low and we have the second higher low right here, which indicates that this may be a push to the upside. Now remember that if we get a trigger 90.70, this has a pretty good chance of moving higher. However, we do have a tough area of resistance into the 90.91. I didn't put it here because it's going to be mentioned as a target level because we already have the 50 SMA. You don't want to have your chart extremely crowded. If it breaks over this 90, then we can have a nice progression towards 9100 and 9110, and then further higher into the 200 SMA and back into these peaks into the 50 and into the 57. To the downside, the bearish part is going to begin at the 8950 level. We break the 8950, we're going to start transitioning lower. All right, let's move on into Russell. Russell, like I said, very weak. It is basing at the lows right here. This is support above for price and resistance below. So you can see that it's really clustering right here. The 4-hour rotation here is coming at 1642. If it breaks 1642, which has a lot of pressure in price, it's a heavy confluence area that can knock the price back down. But if it breaks over this 42 level, so it hovers 42, 42, 42. So if it breaks over 42, the stop under 31 can be used for a progression higher back into the 50s. Okay, so 50, 60 is going to move in pretty much in about 10-point increments. Now remember, Russell is a little bit weaker for the day. Now GC, which was our wild card yesterday because it was our hedge trade for the Dow, I remained into the Dow. I kept a soft stop into the trading room. This is what I do only in the trading room, and I manage the trades for everybody in the trading room, including myself, obviously. And I kept a soft stop, and the price, I waited calmly for the price to settle down and to rotate, added more to my trade, got a better average, got the price into break even. I was done, and then I had gold and bonds to make money for me. All right, so GC has obviously in yesterday's trading session broke above that 77 and hit all three targets that we had on the letter into the 80, 81, and 83. And it made money, right? So if you have occurred some losses from one of the indices that you have traded yesterday, gold had offset your losses in that specific index that you have traded. When we had no triggers and no trades in oil. And oil, I'm going to stay away from oil. Not going to call any trades in oil, but I'm going to analyze it for you. So gold is pretty much hovering right now. I have a stop at a break even. I'm still with one little lot left into, and like you probably saw on Twitter, and I have a hard stop into the 1580. Trail stop right here. So I took profits into 80, 81, 82, and I'm still giving myself a chance. So I have a trail stop for my last lot to achieve targets into the 90. If we're not going to go back into the 90s, that's fine. I'm going to trail out completely with my last lot into the 80s, and it's still a trade very much into the green. This is all, CL, one more. Like I said that I'm not really going to talk about it, but I'm going to bring it up. So CL is very weak at the 52 level. It's actually trading into a range between 50 and 52 right here. We have some bottoming tails back on the monthly chart. So this is a cushion area. So what that means is that you can see the price spiking down and then coming back up. So very, very difficult. Very difficult. I would watch it on the top of the hour at 10 o'clock and see how it is shaping from the 1 hour formation. Perhaps it could be a little squeeze into this area, but I don't want to give you guys any ideas. I am not going to trade oil. It is really, really, really messy. The one thing that I would do is I would expand to the 4 hour chart. You can see it right here. I would wait until the top of the hour right now into 9 o'clock when we're going to have a brand new candle being generated. And we could actually see, let's say, a short squeeze. I could put an alert here into the 52.54 for a possible short squeeze into 53. So again, this is going to be an asymmetric trade. Why? Because you have your entry at 52.50, 54, over 54, and you have a stop here into the 51.95. So this is going to be the risk for the trade. Position size, again, for your, the only element that is not changing ever is your risk per trade. If you want to progress and grow your account, pay attention to this, what I'm telling you right now. You have to risk the same amount every single day in, day out, day in, day out. The only variable is the difference between the entry and the stop. That's it. You apply this rule, you're going to be a profitable trader. You ignore this rule, you're never going to make it as a trader. So it's as easy as that. I mean, there's no way around it. So over 54, 55, this is going to be a trigger buy that can transition higher back into the 53. This is all the way into the 53, and that's pretty much it. It's going to have a target into this area. This is a support. This is a prior support zone that now is a resistance area into the 80s. So targets are going to be after the trigger. It's going to after the trigger point 80 and back into the 53. That's it, and that would be the trade idea for oil. Thanks so much for tuning in. I'll see you guys tomorrow. Hope you have a great rest of the day and a profitable trading day as well. And gear up, 2 more trading days and the weekend is here. Don't forget to analyze your trades, all your trades that you have executed at the end of each week. Thanks so much, guys. I'll see you tomorrow with a brand new video.